Got a little treat for everybody. For you traditional technical analysis participants out there. That's what I'll call you, a participant, because you're unwillingly being duped. So I've added an RSI to my weekly chart here, just to show you, because I'm telling you, I take little snippets. I look at little snippets of YouTube Jimmy, right, to just see what the hell they're talking about. And none of them know what's going on. They're looking for divergence between the RSI and price action, stochastic and price action, MACD and price action, and whatever else kind of crazy shit they're looking for. Divergence between. We focus on divergence between log returns and price action. It's the only thing that matters. Period. The end. Price follows returns. When there's divergence between returns and price action, it always plays out. So what are you looking at here? This is the weekly RSI. And I run mine on a 7 length. I want to catch every little div there is. The RSI set on a 7. Log return z-score, same. Our returns oscillator, same. Look at the bull div between returns and price action. So why all these other YouTube jimmies don't have a clue, because there's no bull div between the RSI and price action, they're lost, right? They're like, oh, we're going to the dungeon. Oh my God, we're going to 20K. Oh, emergency, emergency. They're such grifters. One day it's boom, then next day, gloom. It's crazy as hell, man. We give you facts here at Alpha Trading. We talk about the returns. We talk about deviation levels, whether they be normal distribution, Laplace distribution. We talk about current candle levels on several different time frames, and we talk about projections from significant highs and lows. That's where you start our projections from. So you can see there's no divergence on RSI at all. So guarantee you, a lot of people did not take their short profits and they got wrecked, right? And so they have no clue what's going on. Well, yeah, the RSI is turning up down here on the weekly, but yeah, we're probably still going down. There's bull div between log return z-score and our returns oscillator and price action. Period. The end. That's why we're getting this up move. Talked about it last Friday. Going into the weekend is the weekly return oscillator. Turn off this multi-time frame length so we can see that a little bit better. Yes, let's turn off that 45-minute. Yes, I use that for scalping. You can see I was talking about this right here. The returns oscillator had dipped below the zero mean. I was like, when we open up this new week, are we going to get a bounce? We did get a bounce. Are we getting a bounce in price? So far, $4,000. Not bad. Not bad. So are we going to get continuation to the top side still? There's a lot of things going on in these charts that have to do with reverse wave trend, reverse Fisher, certain variance log return moving averages. That's right. We don't use exponential. We don't use simple moving averages. Worthless in our opinion. Everything's focused on the returns. The returns is all that matters, right? Most people don't understand that. That's why we got such a tight-knit group of people that trade volatility over here, that understand these things. And literally, once you start trading this way and you go back and you look at traditional TA, you're just like, what in the hell are these people doing, right? Everybody's the same way. Once you learn about returns and distribution levels and z-score and volatility, all these things, you will never go back. You will never go back. Let me see something here real quick. Where is, hold on here. There we go. So anyway, I just wanted to show that there literally is no div. No hidden bowl either, right? You got right here, you got lower low, lower low. Over here is where the bull div is. Over here is where the bull div is, ladies and gentlemen. And I'm even going to show you something else. Like right here, on this move to the top side right here, there wasn't any div on the weekly RSI. Low, higher low, low, higher low, right? Look at the div over here on the returns oscillator. at the bottom of the status set. Low. We get this pump up. We come down again. Lower low. Lower lows. Higher low. Move to 70K all-time high. People, wake up, man. We're not going to condemn you for using that crap, but you're being misled, right? Why don't you hear about any of this from any other YouTube channel out there? I'll tell you why. They don't want this information out. That's why you can find, you can find very little information about trading with volatility, probability, and statistics online. They keep a cap on that shit. There's a reason, because they've been using retail traders for decades for their liquidity. They've been making billions of dollars off of retail traders, leaving them in the dust. And that's where they want it. They want the elite. They want the peasants. That's all they care about. They don't want a middle class, right? And they definitely don't want any of the peasants moving their way up the ladder. When you figure out about volatility trading, changes the game. Changes the game. Now, if you're an options trader out there, you know about volatility, right? The one thing options traders don't realize, though, is you can use volatility, probability, and statistics and projections to trade delta, period, the end. A lot of them don't know that. And a lot of them don't know when they're making these options trades, they know volatility by itself is not a directional indicator. They're just waiting for the full expansion or full contraction right around when new options are being released, and they make their trades based on that. If they only knew that you could correlate volatility to price action and it will give you direction, a little bit of a heads up before everybody else, you're always going to be on the right side of the trade. You're not going to be adding legs to your positions. You're not going to end up in condors and butterflies. You're going to know when to buy premium. You're going to know when to sell premium. Period. The end. It's a beautiful thing. Now, when it comes to Bitcoin, we know how Bitcoin is very erratic. That's why we use entropy. When it's really erratic, you're going to find out it's all random. When Bitcoin's trending, the entropy is going to tell you Bitcoin's trending. This is why we use all this together. Very powerful information. Very powerful information. So before this RSI fully melts down my beautiful chart, bye. Okay, thank God. Get that off there.
But that is a fantastic comparison, and for anyone who's still using traditional TA, take note and take heed. What you just saw on that screen, that is very powerful, that comparison, to show you the massive difference between the gimmicky tools that have been fleeced upon you and everybody else if you're using it, versus the tools that we're using here at Alpha Trading. It's just worlds apart.
Worlds. I don't realize all those other indicators, man, they're lagging. They're lagging. Those indicators are being created by what price action's doing. Our indicators, powerful. They're following the returns. The returns make the move first. The divergence between returns and price action lets people know. This is simple. People get confused. Well, what are returns? It's the returns on your investment. Wouldn't you like to know when the returns on your investment are diminishing and to take your profit before you lose it? I don't care if you're trading the 1 minute chart, the 5 minute chart, the 15-minute chart, the 4-hour chart, the daily chart, the weekly chart. You need to know these things. You need to know when to take profit. It's that simple. It really is. And once you dive into this pool of volatility, probability, and statistics, and you start, look, it's not easy at first because your brain is programmed into that monkey mind of traditional technical analysis. You got to break it. I highly suggest if you come over to Alpha Trading, you start to trade this way, literally shit can everything that you've learned about trading the markets. Throw the garbage away. Don't ever look at it again. Here's the problem. Here's the mistake a lot of people make. They always have to be in a trade. So they'll come over. They'll check out our indicators. And because they always have to be in a trade, they don't understand what they're looking at. So what do? They revert right back to their old shit and they continue to get wrecked. Instead of take a break, man. You don't always have to be in a trade. Give yourself a couple weeks, a couple months. I'm telling you, until you've studied this stuff for a while, it's really not going to set in. You might grasp variance or z-score or the returns oscillator, right? But to be able to use it all together, a lot of people, I've heard them say it before. They're like, oh my God, look at this guy's chart. This one guy's like, have you ever heard of paralysis by analysis? And I'm just like, you goofy ass. Maybe for you because you don't understand what you're looking at, but is what you need to realize is I'm not flying a fucking two-seat Cessna here. This is a stealth fighter.
And also, to be fair, I can see why people could get what do they call it, analysis paralysis, if they're sitting there looking at a bunch of goofy indicators that don't give them any useful information. Really, like, well, yeah, it's easy to get analysis paralysis because you're just a deer in headlights if you use that stuff. So, yeah.
So yeah, when I'm looking at this chart, I don't care if it's the weekly, the daily, the 4-hour, the 15-minute. I'm not focusing in on one indicator. I sit back. If you've ever been in the cockpit of a plane, do you understand that have you ever put it this way? I've had several friends got their pilot license and I've went and flown with them the day they got their license, right? Nobody else would. I'm like, I'll go. I've been in way more dangerous situations than this shit. So I'm like, let's roll. So we get up there. These guys by themselves, it's like, I don't even know how to fly. And I'm like, give me the stick. You're making me nervous up here. They're all over the place. They're looking at this gauge and staring, then they're looking like this. When you get in a stealth fighter, or put it this way, or an Apache helicopter, where you throw that fucking helmet on, and the entire screen's either your instrument panel, right? Or crosshairs, whatever you've got it set up to be, you're looking at the whole screen as a whole. You're not looking at any certain indicators. Your eyes are trained to look at this entire chart, and it gives you a signature. It tells you what's going on in the market. That's why when I'm doing my workflow, and everybody knows I go backwards. A lot of people go forwards. I don't. I like to start at the high time frames, usually daily, 4-hour, 90-minute, 45, 15. And if I'm actually looking for trades, I'll drop all the way down to the 5 to get my entry. But I'm buzzing through them, right? I'm on the daily. I focus in. I look at the signature. Go to the 4-hour. Focus in. I look at the signature. Granted, too, remember, I got one eye. It's harder for me. I focus, I get the signature, and I just move right down through the line. And by the time I get down here to the 15-minute, put it this way. Everybody knows what my P&L is. It's high. 9 out of 10, right? Everybody knows that. It's like I don't toot my own horn. I toot these indicators. These indicators give me good entries. That's the biggest problem with people that are trading traditional technical analysis. They don't get good entries. They use horrible risk management strategies that are taught to them by all the YouTube jimmies out there. They use horrible psychology, which is, we all know this that are in alpha trading. Human emotions are natural. Don't bottle the shit up. You lose a trade. If that one trade I lose, I'm not very happy. The dogs are looking at me like, oh shit, is he going to feed us tonight? But it's like, there's 3 things when it comes to trading psychology. The first most important one is don't be emotionally attached to your trade. Second one, take your profit. Third, limit your loss. It's that simple. All the other trading psychology bullshit out there, and there's literally YouTubers out there that have entire fucking series about it with 10s and 20 and 30 fucking videos about trading psychology just to get views and spew their bullshit. We all know who I'm talking about. It's insane. It's all bullshit. They're either selling programs, they're selling books, they're selling something to try to get people to think that trading psychology is so important, when the only thing you really need to know is if you are emotionally attached to your trade, you're going to get wrecked your entire life because you're not going to take your profit when you need to, and you're definitely not going to limit your loss because I know how to trade. I got a great entry. Oh, whoa, well, Bitcoin's going the other way, but I know it's a great entry and it's going to turn around. Liquidated. Happens all the time, ladies and gentlemen. So this is what we do at Alpha Trading. We don't use shitty risk management strategies. We don't put stop losses in the damn system. Number one, when you know you're getting a good entry, because a lot of your trades are based on the returns, specifically the divergence between returns and price action, you don't have to worry about it. But just in case, because Bitcoin's a very volatile asset, you've got the stop loss in your head, right? You've got a parameter in your mind. Number one, where am I taking profit? Number two, if this thing does turn against me, how much am I willing to lose? You can run numbers, you can do things. To be honest, a lot of that stuff doesn't even faze me. I don't even think about it like that. I look at distribution levels to take profits, and I've got that stop loss in my head. I don't like to lose a lot, but it depends on how much I'm trading. If I'm in a 5 Bitcoin trade or something, I can lose $1,000. Bitcoin can have a move, right? It can have a move the other way. But I'm telling you, most of the time when you're getting your entries on a 5-minute and you have a good workflow where you're able to drop down through the time frames, and trust me, this cannot be taught. You learn this by putting the time in. We can teach you how to read the indicators. We can't teach you how to read all the indicators as a whole. We can't teach you how to read all the indicators as a whole and going down through time frames and reading them all on the different time frames and understanding what you're looking at and knowing that when you get to the bottom, you've read it from the top down, and whatever you see on the bottom, think of it this way. When I'm dropping down through the time frames, I'm looking for think of it this way. I'm looking for an open door. Is the door open as I'm dropping down? Is there just a crack on the 24, right? Is the door halfway open on the 4-hour? What's it look like on the 90-minute? Is it almost all the way open? Do you understand? And then I get down to the 5-minute to enter a trade. Door's wide open. I got direction because of the indicators, and I know because those doors aren't shut in the higher time frames, this thing is going to run right uphill, right through all these time frames, right through those doors. That's the best way I can probably put it. And that's just right off the top of my head. That just rolled right off my tongue. That's how I kind of do this. But you cannot teach people to do that. You have to stare at these charts. Oh my God. If I would be keeping track of how many hours I have on the charts, it's ridiculous. If I had a quarter for every hour my eyes have been on the charts, I'd be a bazillionaire. A bazillionaire. So, incredible. And I've been making a lot of moves lately, right? I'm making a lot of moves, trying to set myself up with different things. Because, to be honest, my Bitcoin days are almost over. I'm making some moves where it might take all of my Bitcoin to do what I want to do. So, it's getting real. It's getting real for me. Trust me. MJ's about the only one knows what I've got planned. And if I pull it off, it's going to be massive. So I'm excited. But anyway, yeah, man. So I'm making a lot of moves in NFTs. You got to be careful out there with NFTs. You talk about rug pulls, and like we've talked about previously, well, you want to check the boxes off. You want to set up a system where, yep, they got a good Twitter following. Yep, they got a big Discord following. Yep, they're Certec verified. Yep, got that check. Blah blah blah. We just had a rug pull the other day. All the boxes were checked. They started their mint, grabbed up about $1.3 million, and boop, gone. No, right about the time everybody started going, hey, why haven't you sent my NFT yet? They're already gone. Twitter down, Discord down, website down. History. Crazy, man. So you got to be careful. So I'm looking for people that are treating their NFT project like they are building a business. One, for example, Catalina Whale Mixer.
Mike
These
Tyson.
guys, Mike Tyson just bought a Catalina whale. These
Wow,
guys,
well done.
yeah, these guys that created Catalina Whale Mixer, people don't they need to realize who these guys are. They've got connections in so many different industries. They're big time music producers, right? So they know a lot of people and they are building a global brand. And this is just their first NFT release. They've got so much stuff in the pipeline. It is incredible. And it is in my opinion, not financial advice, it is a great opportunity. The floor, I think, right now is probably 14 sold by now. It's going to pop. It's going to pop big time because more people every day are coming on. And it's a great community, not toxic at all. There are a lot of these NFT communities, it's garbage. It's very toxic. So let's get back on this stuff, though. But that's a great project I'm looking forward to. All right. Now that I got all that big rant out of the way, let's take a look at the daily chart because the 4 hour, and here's what's great. Once you stare at these charts so long, I could literally tell you by what I'm seeing on price action, what like lower time frames are going to look like. Right? And I know for a fact right freaking now there's a shitload of bear divergence on the 4 hour. Are we coming out of the hole right now? Is that weekly bull div between returns and price action? Is that going to play out big time for a trend reversal? It very possibly could. But at the same time, as that bull div is playing out, it's setting up hidden bear on higher time frames. So you have to get to a point where the bulls really got to shoot, right? They got to bust through any bear div or hidden bear div setting up, and they're attempting right now. They're attempting it right now. But look on the daily. Look at this bull, look at this hidden bear, right? You got a higher high on the returns oscillator. Price action is a lower high from that data set up here. I mean, Bitcoin you literally needs to get up close to 48K. It's going to take one of the days where we have a $5,000, $6,000, $7,000 pump and we get close to 50K again. Now, considering this returns oscillator is pretty high, it's literally past the second standard deviation right here. So returns oscillator in itself is having a fat tail event, right? From what I'm seeing on all the other indicators, there's room. There's definitely room. Number one, the Z-score log returns. There is no hidden bear yet, right? There's no bear div yet from this last data set. This data set, there's no hidden bear yet. The hidden bear is just on the returns oscillator. The Fishers are charging up. The DLP is finally breaking back up to the top side here after a lot of bull div on the daily. A lot of bull div on the daily from literally all the way this move right here. These are all lower lows. From this point right here, they were all higher lows all the way across to this current candle. And it's finally popping up above. This is going to be a rocky ride though, because you drop down on this 4-hour, higher highs on the 4-hour. Look at the log return z-score. Number one, the log return z-score got outside the 99% confidence interval. All right. Well, lower lows, lower lows on log return z-score. Every little point of it. All these higher highs. Returns oscillator. Look at the returns oscillator. High, lower high, lower high. This returns oscillator breaks the downside of this zero mean. You've got a couple stabs of that bear div. It's going to play out that could possibly come back down here and test this 9-length variance log MA. 42.5-ish area maybe. I want to see the new daily volatility range here in about an hour and a half. So I'm kind of planning this. And the fissures on the 4-hour. You've literally got the high length fissure set on a 9. The baby's so outside the third standard deviation band, it's crazy. The low length is getting ready to nail the third standard deviation band. One good thing, DLP, there's no div. There's no bear div on the DLP. So this is what this is telling me. There's no bear div on fissure, right? The bear div's on the log return z-score and the returns oscillator. So is what I'm looking for. I'm definitely looking for a pullback from here. Right now, we're rejecting off the 54 length reverse the variance log MA. So that could be the point right there that could shoot this thing back down. Because regardless here, right, this 9's going to have to cross up to 33, right? And they're both going to have to cross up to 54. We're going to have to get everything turning back up. So is what I'm looking for. If the bulls are taken back over, we are up. You can see it found support on the Gaussian mean after this big pump candle. We had that little pullback right there, up and away, right? The deviation bands are starting to flare out. So when I see that, when we have a quick move or a quick sell-off, I'm looking at these deviation band levels, 42. 42 on the 4-hour. First standard deviation band. Let me see something here real quick. Pop up on the 12-hour. This whole move's random too on the 12-hour. This on the 12-hour, this was all trend right here. All right, you know by the candle color. This move up on the 12-hour here, all random. Yeah, that's a lot lower. Where's this Gaussian mean? There's that 42.5 area. Okay. So this would be more likely, maybe we just get a 12-hour candle backfill, right? With that 4-hour div. Let's see here. Because, yeah, Fisher's got room to run. The bull div on the DLP's playing out, probably getting ready on the next 12-hour candle to pop to the top side. Log return z-score on the 12-hour looks great. Returns oscillator, there's a tiny, some weak bear. But this thing's got room to run big time to the top side. So does the z-score. We're having an outlier on the variance, positively correlated. Good to see. But look where we're getting stifled on the 12-hour, on the 9. Okay. Bitcoin's got a lot of work to do. This is not going to be quick. This is going to take some time, 100%. But I wanted to point that out on the 4-hour that this baby's going to definitely have a bit of a pullback. What's this 90-minute looking like? Yeah. To be honest, this 90-minute doesn't look very bad, especially these highs where we had these outliers on the log return z-score. It did not create any bear div. So this is how I'm working. Remember, I'm doing a workflow. And so what I'm trying to do is see, look, was this just a false pump? Was this like just what do they call them, dead cat bounce or whatever? I don't think so. The charts aren't telling me that. Charts are telling me though this thing's going to pull back a bit. All right, wouldn't be a bit surprised to see an outlier to the downside on this 90-minute going into the new day. Let's see what these bottom MAs are. What do you know about 42.5? Close anyway, 42.4 area. So if that bear div on the 4-hour plays out, which it always does between returns and price action, that's probably what we're going to be looking for. And there is a little bit of bear div. I mean, if we close a candle right now, you can see it pulled back to the top of this data set. And right now, there's a lot of pattern traders that are looking at the 90-minute going, hey, man, we got an ascending triangle here, man. This is super freaking bullish. Oh, we're going to the moon. So what they don't understand is that volatility is creating this pattern. And woohoo, we got a big ass bear wick on this 90-minute candle we're cooking with right now. And there is a little bit of bear div. We just got a new 90-minute. So now let's see what just happened. Yeah. I mean, it actually doesn't look too damn bad, to be honest. I mean, especially we got the Shannon entropy percentiles starting to contract, negatively correlated. The Z-score of historical volatility is coming down in a negative correlation, and the Z-score is turning around to come back down. The volatility is contracting, negatively correlated. So everything on this 90 minutes telling me this bear div is probably going to play out on the 4 hour, but it's not going to be that bad. It's not going to be that bad. Maybe $1,500, something like that. Shake out some of these idiots that didn't already take their profit. All right, let's go to the VRE here. So here's what went on. Right, our beautiful indicator here that pretty much tells you all what you're looking at here is price action volatility ranges from the day, the week, and the month, and distribution levels for the 4 hour and daily of normal distribution and Laplace distribution. So you can see what happened here. This was the new daily range. This has not happened in a while. Hooray! Bitcoin opened up a new day above the daily price action volatility range. Did it support price action? It sure did. But look what else was right on top. This was a no brainer. Remember, I talked yesterday, I said it's going to be real close. And if you guys go back and you listen to that stream, I nailed this daily range like almost to the dollar. But we didn't quite get inside the weekly. But this bottom of this weekly range, here's the center of the weekly, top of the weekly, where we're rejecting from, by the way, right? When everybody's using their magical little exponential moving averages, we don't give a flying shit about that crap. I want to know where the top of the weekly volatility range is because it's going to kick price action back every time. I want to know where 4 hour and daily distribution levels are. This last 4 hour candle right here, we open up the 4 hour candle, it rejects to the dollar off the first standard deviation normal distribution. That's this little skinny blue line right here. Powerful. Where did it just bounce off of? The daily first standard deviation to the top side, right? Well, we have not done this in a while since Bitcoin, I'm telling you right now, since Bitcoin literally has been dumping down, we have not closed above the first standard deviation. This will be really good for Bitcoin. And what's about to happen today? We're getting ready to get this new daily range, ladies and gentlemen, above the center of the weekly. I talked about this yesterday. If we can continue to get these daily ranges up above this weekly, here's what I'm looking for. So what's the bottom of this range? Of course it is. Of course it's right around 42.5. I wouldn't be a bit surprised because this is what happens too. We'll get this new daily range up here. Bitcoin has that quick pullback. We get a wick down to the bottom of the weekly range to liquidate all these over leveraged junky gamblers. Like I've said in previous streams, if you're going to gamble, go to the damn casino. Quit using leverage. And then if you use it, use 1-2%. Don't make yourself a target because that's exactly what you're doing. And that's why you keep getting accounts liquidated. That's why you capital N, capital G, capital M, capital I. Never going to make it, man. You're never going to make it. That's right. Alpha traders, capital G, capital M, capital I. You're going to make it. Yes, because you're going to understand this stuff big time. Let me throw this projection on this 15-minute back to, this is a little choppy here, right here. Yeah, 42 bars. Let's see here. Huh. Funny how this thing works, isn't it? So you put this projection, this Laplace distribution right here. We get this run up. Where's it reject from? This is why I do this. You start a move like this, especially if I see this, we get this, boom, we get a bearish candle, bullish candle, get a bearish candle. As soon as this thing's, I'm going to throw a projection right here. I'm going to immediately see that this 99.7 Laplace distribution range is right at the top of the weekly volatility range. Did it reject from right here? Yes, big time. Then it pulls back to the center of the weekly range, goes up, rejects again off the top side of the 95.4 Laplace distribution range, just did it again. All right. So did we make another run by the end? Did we get up 42,274? I don't know. Now, this is some good resistance right here. I'm telling you right now, the bears are fighting for their life right here. They are going to defend this area like you would not believe. Right around the 44K area is going to be defended. The bulls are going to have to push through. Here's one good thing. The bulls have been saving up their energy for, I don't know what, weeks. Why these bears have just been running rampant around, eating honey and getting drunk on it and fucking just, yeah, clawing their way into profits. Most of them don't take profits, though. That's their problem. They're probably liquidated. So they're like, oh no, I'm in the bear gang and we're going to $2 Bitcoin. I'm going to ride this baby all the way down. I'm going to be famous on Twitter. Everybody's going to talk about Billy the Bear. It's just stupid, man. Take your freaking profits. Learn the distribution. Understand where to take profits at. On this run right here, first off, I'm taking profit at the first standard deviation. Right here. Boom. I'm not waiting for it to go to the top of the weekly range. This is what people don't realize. In the bull run from 215 to the end of 217, did I take profits on after Bitcoin rejected, by the way, off the second standard deviation normal distribution from a projection when Bitcoin was $250 to 20K? When Bitcoin started in September of 2015, the 20K high rejected off the second standard deviation projection within a couple $100 on an asset that was worth 20K. Did I wait for that rejection and then take profit or start taking profit on the way down? Hell no. I sold my alts when Bitcoin was at 16K, climbing. Sell, 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 right at 16K. That's how you take profits, right? You take profits on the way up. You don't wait for it to reject and then take profits on the way down. Profits, profit. Could I have made more? Yeah, because when Bitcoin did top out, alts ran, right? Alts ran to like what, the end of January? Something like that, if I remember correctly. I didn't give a shit. I made a bunch off. Where was those shit coins?
Yeah. Yeah, it was like legit
Tron.
early. It was a month after Bitcoin, basically, January.
Mm-hmm. Tron, Verge, and Cardano. I took profits on them on the way up. All right. Let's see here. Let's go. I talked about this yesterday. Let's go to the 4 hour. If you go to the stream yesterday, I was talking about this level. We broke it. Now, said is what you're going to want to see. You're going to want to see a few 4 hour candles close above the reverse wave trend. That's this white dotted line. Did we reject to the dollar off the reverse wave trend yesterday? Yeah, we did. To the dollar. Even opened up a new candle. Another wick rejected. Then we come down. Where did we find support at? What's this skinny little white line? That's the Gaussian mean of the deviation bands. Now, we have successfully closed today 1, 2, 3, 4 hour candles above the reverse wave trend. Where's the reverse wave trend out now? First thing, you need to realize how powerful the reverse wave trend is. Rejection, rejection, rejection. Yeah, that kind of caught the, what is that, the 33? Yeah, it's a 33 length variance log MA. Rejection, down we go. Rejection, now we're up above it. 40, what's it at right now? $43,091 is where the reverse wave trend is right now. So that 42.5 area, might be a little too much asked for. Maybe we get a wick below the reverse wave trend. This is getting tested. Trust me. What's down here? About 42. Yeah, 42.8. Let's see. The 9 variance log MA, 42.5 on the 4 hour. We just talked about it, right? Maybe we get a wick down there and it pulls back up. Is what you want to see now. The reverse wave trend acting as support. Because guess what's next? You see this dotted line right here? This is the beast. This makes the reverse wave trend look like a little puppy, right? This is an Anatolian shepherd up here getting ready to chew your face off. And it is literally at 44. What's that bad boy? There, it's the same color as my damn power means. It's about 44,750-ish area. This is going to be the next hurdle. This is going to be the next hurdle. And then this 99 length variance log MA. These are going to be hurdles. 44,750 area, 45.4 area. But when we close this daily, right, they're going to drop a little bit. These are going to be the areas to look for. We're going to have to bust through that. But I'm pretty confident right now that we're probably at this point going to come back because of the bear div on the 4 hour that's building between returns and price action. Probably going to see this reverse wave trend get tested. If it holds, that is good news for Bitcoin. That means what does that mean? The algos that are moving this market, they're going to have the buy switch turned on, man. And if it does come down here, we could get a massive bounce out of here because, damn it, me put a weekly here. Yep, I'm on the index. Because of the bull div between returns and price action. And for God's sakes, these fishers haven't even turned up yet. There's only one part of traditional technical analysis we'll ever use, Fisher transform. It's powerful. We're not going to lie about it. I'll tell you what, when these weekly, maybe it happens at the end of this week. I'll tell you what, we get a powerful 5K day here coming through the end of the week. These fishers will turn up. 4 hour Cardano right now, or 4 hour Bitcoin, Jesus, expanding Shannon entropy, heading into positive correlation. I'm telling you, everything I'm seeing on these charts, we're going to have a pullback. I can't wait to get this new daily price action volatility range, get some confluence between some of those numbers I've been talking about on the regular charts, right? And then looking to see where the new daily range is at that. Some new daily Laplace and normal distribution levels to really get some confluence to see where this thing's going to pull back. Like if I'm seeing, let me take a quick peek here. Whoops, there it is. Let's see here. Where's this new daily range going to be? Oh, it's going to be nice and high. It's going to be up in this area. And we definitely want Bitcoin to close above like 43,760, 43,775, up above this first standard deviation. That would be nice to close this day above there. Then coming into the new day, have the pullback into the new daily range down here, and possibly maybe we get a wick down to the bottom of the weekly to see, because now you got the bears defending the shit out of the top of the weekly, and you're going to have the bulls defending the shit out of the bottom of the weekly. Here's the battlefield coming into tomorrow. Whoever breaks these ranges, that's what we're going to see probably going into the end of the week. The bears push this thing back down below the bottom of this weekly range. We're probably going to be stuck there all weekend. It would not shock me at all in the next couple of days if they break down below. If the bulls break up outside, start closing some 4 hour candles above here, it's party time. It's party time. If we go over here, let's go to a monthly. the 1S or the 68.3 Laplace distribution to the top side on the monthly charts at about 50,300. The weekly first standard deviation, and I forgot to show this, 45,683. Remember that number, 45, let's just say 45.7. So now I bounce right over here. That's the 1SD on the weekly. What's up here? 45.7. It's kind of in no man's land. Today, we're probably, if I see that weekly first standard deviation going in tomorrow, matching up with some daily levels, like the 1SD to the top side, I would be targeting that for sure after a little pullback. But look where we're at right now. Here's the projection from the 41K low. Look where Bitcoin's rejecting from. Not only is it rejecting from that, or it's staying right around the first standard deviation and on the daily chart and the top of the weekly range, it's right at the mean. It's right at the mean of this projection. I mean, right on top of it right now, going into the end of the day. That's the dotted line is the mean of this projection right here. The top side, the 68.3 top side, all right, this is the 68.3 Laplace distribution range on this weekly projection from the 41K low. I've talked about this since we dropped down in here and found support on the bottom side, found support on the bottom side again. And I told people we close daily candles below the bottom side here that right now coming into the next couple weeks is like a little under 41. Look out below, man. Hey, it's finding support, and there's bull div between returns and price action. That bull div could definitely fling us back up to the top side of the 68.3, a tick under like 40 or 55K. We get by that, then you're looking at the mean of this projection when we had the 50% pullback from 60K to 29K. That's going to be a powerful spot. You've got the bottom side of the 68.3 about 59. You got the mean at about 61.2. So these are all areas that are going to have to be broke through. People are like, oh, that's just fucking crazy lines on a chart. What are you drawing here? Little mini volcanoes? What is that madness? This is Laplace distribution projection. This is all that matters really in the markets. So we get to these areas. These babies are resistance big time. We get by these. We get some daily. I mean, it could happen. We get some dailies above here on this week. If this week we pump like crazy, or these next couple weeks, I'm telling you right now, as soon as we close a weekly candle above this 68.3, we are going to the 95.4, and it's over $100,000. Mark my words. Mark my words. I haven't been wrong very much. I'm not tooting my own horn. I'm tooting the alpha trading indicators and using the distribution to try to figure out what the hell's going on in a random market, in a market that's random 80 to 90% of the time. All right. It's usually random, but using our entropy indicators, we know when it's trending. And I guarantee you, if we start making a run to 100K, woo, the entropy is going to be trending on the daily, the 2-day, the 3-day, the weekly, all that good stuff. So we got that to look forward to. And that is going to roll us right into the end of this stream, which is beautiful. It's a good stream. A lot of good things going on in Bitcoin land. So if you're on YouTube watching this for the first time, you're probably going, whoa, my hair's back. I feel like I've been riding with the top down. It's like, yeah, you have, man. You have. We move faster at Alpha Trading. Don't get confused by the big fancy words. Start Google them. Google the distribution. Google Z-score, right? Google entropy. Start to figure out what the hell's really going on in these markets. Because the high frequency trading firms that are using all this stuff to program their algos that are literally trading probably 90%, the algorithms are what's pushing this market around. If you think it's retail traders, woohoo! I don't even know if we can help you. Okay, so it's the algos that are pushing these markets around. Don't forget about it. And definitely don't forget what they're programming the algos with. You'll have YouTube Jimmy saying, well, these algorithms are being programmed with the Fibonacci sequence. Yeah, they're going to bounce there and reject there. And it's just like, oh my God. Okay, whatever. whatever you want to say to get yourself some views on YouTube. We could care less about the views on YouTube. They come organically when people get their head out of their ass and start realizing the way they've been trading is counterproductive to the amount in their bank account. That's a nice way to say it. You're cucking yourself.
Very
Why
true.
do you want to duct tape you're duct taping yourself? You're sitting in the closet watching everybody else trading volatility make money. I don't get it. It's okay. I've got a razor blade knife. I'll cut the duct tape. We'll bring you over to Alpha Trading. We got lots of good indicators. The link to the Discord's in the description of all of our YouTube videos. You'll get a welcome message. Follow the welcome message. Look in the shop channel. There's 2 different levels of the Discord to get you access to the Alpha Trading system. Right? Open up a support ticket. Tell us what's on your mind. I'm just breezing through. I just thought I'd take a look. I'm going to hang down in the public chat. No problem. Or, hey, I'd like to get in on this Discord level. No problem. Come join our nice little family we got cooking here. And with all that being said, wherever you live at in this big, crazy, I don't care. You can call it a metaverse, you can call it reality, whatever. We're all in the matrix. They're using us as batteries. Everybody run for your life. Panic, panic, panic. Obviously, I'm being funny. But you have a wonderful rest of your morning, afternoon, or evening. We'll see you tomorrow, 2 p.m. Pacific Standard Time. Thanks, guys, for watching live in the Discord.
Ciao. Thank you.